Thanks so much for tuning into BQ Conversations. I'm your host, Neeraj Shah. Real estate sector and the revenues that have come out and the results that have come out in Q2 rather, you would argue have been mixed. And there is, of course, a bit of an anomaly around how to read into the numbers, because what is reported is materially different at times from what has actually happened in the quarter due to the reporting rules that have come about in the last couple of quarters or the last 3 quarters. However, on the reported front, Brigade Enterprises revenues were up about 17% YOY to about 879 crores. Strong growth in hospitality, leasing segment, and steady growth in real estate as well. The question is whether this is the kind of mix that could continue, or could there be a blip after a fairly strong growth in the real estate vertical in the last many quarters that the company and the industry has seen. Mr. Atul Goyal joins in to talk about that. Mr. Goyal, great having you. Thanks for joining in.
Thanks, Neeraj.
The pleasure is, of course, ours in having you. And can we start off with the real estate piece? Because there, Mr. Goyal, we're starting to, I'm not saying we're seeing chinks in the armor. The sales numbers are still looking strong. The growth rate is tapering off a little bit in select circles. What is your experience of what's happened in the last quarter, and how are the next couple of quarters looking?
See, last quarter, I'll say the quarter was at least 20 days short because of the Shraddhs which are there and where people don't buy the property. So that is one of the major things. And that's why Q2 is always subdued in any year if you see. So Q1 versus Q2, if you see year quarter on quarter, generally Q2 is lower. So that is one of the reasons. Demand, I think, is there in the market. It can be specific to the market, but where we are present in South, demand is there. ITS is doing very well. Consolidation is playing a very major role. And affordability for the customers in Bengaluru, from affordable index, if you see, that is EMI over their salary, from 48% it has come to 38 or 35%. So people have a lot of money. In fact, in Mumbai, where you are there, from 93% it has come to 75%. So salaries have been, or income has been increasing a lot. And that is where the investment in housing is coming. And pandemic has, of course, made everybody aware that if you have to buy a house, this is the right time. So I think demand will be there. Bengaluru is one of the highest sellers. There was a report from one of the brokers, and they said Bengaluru did the highest sales, pre-sales during half year. And of course, Chennai has been doing very well, where we have been expanding very, very fast. And Hyderabad has also been doing well because the price rise in Hyderabad has been significant there. So real estate overall, I think there is demand, and it should continue in coming quarters as well. And that shows in the launches which all real estate developers are doing.
And which will probably show in your launches as well, because the expectation is that what you will do about, if I'm not wrong, the number about 13 odd million square feet over the next 4 quarters.
Yeah, 4 to 5 quarters, yes.
Okay. What price points are selling? Because I remember a conversation with you wherein you had mentioned that your price point is right around that affordability segment, not low cost housing, but affordable housing.
Yeah,
are you looking to have a larger portion of your launches in that segment only, or is it becoming slightly premium because the affordability is moving up?
No, it is both. I think we are into a mid segment as well as a premium, you can say. I'll not say luxury, but a premium housing. That is where luxury also we are launching. Like in Chennai, we launched WTC Chennai Residences, and it has sold it. Every residences is more than 2.5 crores in Chennai, and it has sold very well. It's we have a WTC Chennai. Besides that, we have been developing. So we are doing residential, like we'll do a high scale residential in Mount Road, where we have taken land from TVS. So that is there, but our bulk of the inventory is in premium and mid-income housing, and both are doing very well. If you see the latest report for Nanorok, 67 to 68% of sales all over India is in mid-income or premium housing. So we are mainly at that. We'll also have some plot launches which are going to come in this quarter. So we have both plots, mid-income and premium housing, which are going to come in these 4 quarters.
Got it. Mr. Goyal, would you believe real estate while real estate will continue to be the bedrock, the alpha in growth that is coming in from hospitality or the steady occupancy in office portfolio is adding that bit of sheen? Because hospitality, we see pure play hospitality companies or real estate companies with the hospitality portfolio, all of them are showing exceptional results. You reckon this run rate can continue for you?
So I'll put in 2 things. Real estate will continue to be the stable. It is going to be there, and 70% of our revenue comes from there, and it's going to be there. Hospitality, I think, should do very, very well in next 2, 3, 4 years. I don't know how much, because see, this hospitality business or results, what you're saying, is only on the domestic travel. International travel has not yet started fully. You have not seen that much people coming internationally or traveling internationally. Inbound travel, I'm talking to India. So I think hospitality is going to do very well in next 2, 3 years. See, what is the difference is that you have returned to your ARRs. ARRs still, we have returned to our ARRs, but some hotels are still trying. Occupancy has returned. Only issue is that your cost, which were then in hospitality before, has been trimmed down permanently. So whatever hospitality which was working, say at 20 or 30 or 40% of revenue, today is working at 25. So that is where the change which has brought by the pandemic, where people are more efficient in operating hospitality, because hospitality is one sector which had borne the maximum problem during pandemic. So hospitality going forward should do well. In fact, we are so much positive in hospitality. Whatever construction we had stopped during COVID, now we are restarting it again, start building the hotels again.
Okay. Well, your net debt position has improved materially, so that should hold you in good stead. You reckon with all of these expenses that you will do, which is that 1.3 million square feet launch that you plan to have, or the hospitality, 13.2 million square feet launch that you plan to have, or the hospitality investments that you would do, will they impact the net debt ratio for you?
No, not at all. Hospitality, we had already done structure in Mysore. We are doing, now we are doing the finishing, so only 40-50 crores is there. So that is not much. In residential, see, we are very clear. We have been launching for last 2 years, and we have not taken a single loan in any residential project. We have been trying to use the project cash flow cycle to do the construction, and we have been successful in that. I think if the sales continue the way it is, we may not be required to take any loan in residential, but it all depends upon the market, how it behaves. But we are very confident our residential loans will be low.
Okay. Mr. Goyal, one question really. From where you were in 2020, I reckon due to the pandemic-led demand and otherwise, the growth that has happened has been material in the last 2.5 years. But that is real estate. Now that there is real estate plus hospitality plus plots, which of course are part of real estate, but I'm just saying plots as a separate business, plus leasing and office spaces getting occupied, etc. From where Brigade is right now, what's your sense of what the size could be 3 years out? Because a lot of people say that real estate cycles, when they turn for a period of 5, 7, 8 years and not just for 2.5 years. So do you believe we're in the midst of an upcycle? And if so, from where you are, where would Brigade be 3 years out?
I think it should, our revenue should multiply by 2-3 times. That is what things. See, we are seeing 20% increase in real estate. So we will see 2-3 times. No, it says 20% in real estate is what we think year on year. So that tantamount to around 40-50% of pre-sales what we are doing today after 3 years. So we are at say 4.5. So we should be around 8 million, 7 to 8 million sales, which we must be doing in after 3 years. Leasing, we should be at 750 crores or say 900 crores by that time. So that will, when everything would have been leased, and of course, new leasing will also start coming in. And hospitality revenue has been there around 350, 360 crores. It can further improve on that. Demand depends upon how much addition we do in the hospitality portfolio. But I think it's a very good sign. Leasing, if the SEZ Desh bill comes, I think leasing will be very fast in all SEZ all over India. So that is a much difference which is going to happen. There is some issue in US because of the recession, what they are talking in US. So companies are still dilly-dallying on the closure of their leasing. But if the Desh bill comes, I'm sure that all my leasing portfolio will get leased in 5-6 months. So we are very confident, and revenue will start coming. So that's a very big time. I'm not taking here capex because as and when the leasing happens, as and when real estate cycle goes up, we can invest more in land. So
Sure.
that will catapult again to a good revenue where the brigade can reach.
So final question. The estimates are that in terms of value in rupees crores, you could be around 3,600 on in FY23. Would that be a good estimate?
Yeah, it can be. See, and again, I'll tell you, the difference is again the revenue accounting. That is real estate, what you were talking about, AS 115. So it all depends how much registration you can do, and then you can account for revenue. But I am sure we'll definitely do that.
And so, okay, so roughly between, let's say 3,000 to 3,600 odd that you do, let's say in FY23, you reckon there is a fighting chance that you may reach up to 7,000 odd crores by FY26?
It is possible.
It is possible. Okay,
it is
great.
possible.
Well, we certainly hope it happens.
Because,
please.
I'll tell you, when 4 years before, the market capitalization of this company was 2,500. Today, it is 12,000. So company has done very, very well. And I think it should do very well in coming years as well. Okay.
We cross fingers for that, Mr. Goyal. Thank you so much for speaking to us today as well. And all the best for the quarters ahead.
Thank you, Neeraj. Thank you.
And viewers, thanks for tuning into this conversation.